Hey, good morning, and welcome to another episode of Coffee with Caleb. So this morning we're going to talk about life insurance. I know, I wouldn't have thought I was going to be making a video about this either, but it's important, and I'm actually really glad. This came in as a request, believe it or not. Somebody asked, hey, could you please explain to people why it's so important to get life insurance when you're younger versus older? And that right there is sharing a little bit of wisdom that I hope people pick up on as we go through this. So let's break it down and talk about it. Now, before I started kind of deciding what we were discuss, I did a quick Google search, and I found that Princeton did a survey, and 65% of 18 to 29-year-olds don't have life insurance. Yeah, I know, that's a lot. The 65% is alarming, but so is the age group. And why I say that is because it is so cheap for someone at that age that it's foolish not to have it, but also because you've probably maxed out your credit cards, right? You're most likely going to school, and if you're going to school, you got student loan debt, and then you're probably looking at buying a home, if not already have a home. So you've got all this debt, but no life insurance. That's concerning. So with that, I want you to keep that in the back of your mind as we discuss life insurance a little bit. And I also want you to think of this quote I heard once. It said, needing life insurance is like needing a parachute. If it isn't there the first time, chances are you're not going to be needing it again. True, right? All right, so let's talk about the benefits of life insurance. First and foremost, it gives you more control of the money after you pass away. So very much how a trust allows you to divvy up where money goes, you can do the same thing with your life insurance benefit and what it can do. You can say, hey, I want it to pay in a lump sum or in equal payments, giving you, the owner of the policy, control of that. The next reason is it's lower taxes. And by that I mean none. You don't pay income tax on life insurance. It's a tax-free event. Now, there's exceptions as to anything and everything, right? But not paying income taxes is a huge benefit. And also, it leaves you the opportunity to leave behind a larger inheritance. And what I mean by that is if you were to compare a non-qualified account of some sort compared to life insurance, in those early stages of life insurance, your rate of return is really high, right? And so that would give you the ability to leave behind a lot more money compared to if you just had some non-qualified account. Right, so when we look at insurance, there's two types. There's term and there's permanent. When they boil them all down, that's really what they come down to. So term simply means that you're just gonna have life insurance for a certain amount of time, 10 years, 20, 30, whatever. But when that term ends, the life insurance is done. It doesn't mean you're dying, it just means that the insurance is done. Now, permanent means you will have life insurance for as long as you pay the premium until the day you pass away. So it's permanent, it's for your entire lifespan. Now with that, there's different types of term, there's different types of permanent. Typically permanent allows cash value to grow inside of it as well. But keep that in mind when we compare this. And why I say that and bring it up is because when that term ends, so let's say you just did a 10-year term, in 10 years when that term ends, you're going to have to re-go through insurability. And that's one of the first reasons right there why we want to consider life insurance earlier in life, is because having to re-meet insurability is unfeasible. As you get older, say you're in your 70s or 80s, you may not be able to meet insurability. One, your age, but two, because who knows what life has exposed you to, and perhaps maybe you now have a form of cancer, and you can't get life insurance when you're wanting and needing it the most. And the other reason why we look at it is because of cost. So what I'd like to do is take it to the whiteboard and break down the numbers and explain the difference. So give me just a minute here, we'll have it set up. All right, I'm back, and I got the whiteboard here with me, and what we're going to talk about is just the cost difference, breaking down strictly by the numbers. In this scenario, what I did is I compared a $500,000 term and a $500,000 permanent policy, and for the term, I chose a 30-year term. And I also compared a 25-year-old to a 55-year-old and a male in both situations. I also didn't change anything as far as whether they're a tobacco user or their health conditions or anything like that. So that stayed all the same. So looking at the chart, we can see for a 25-year-old male to purchase a 30-year term would cost him $65 a month. That same policy for a 55-year-old would cost $470 a month. That's 7 times as much money for the same insurance just because they're older. So right there we can see by waiting it costs us more money. Now, if we look at permanent, so coverage that would last us our whole lifetime, it would be $274 a month for a 25-year-old. Obviously more money than term, but it's coverage forever. You don't have to go through insurability again. Now for a 55-year-old, it'd be $1,217 a month for the same insurance, whether you're 25 or 50. But because you're more high risk, they're going to charge you more money. The other thing to keep in mind when we're looking at this term and the permanent is when this 30-year term here is over for the 25-year-old, is they're going to have to re-go through insurability. In other words, that means their insurance has ended, they don't have the coverage anymore, and they're now going to be paying this cost because they're now 55. Whereas if they would have done a permanent policy, they would have locked in this rate. That's what it is forever. So obviously way cheaper than this is, and of course because they were younger, much cheaper than here. So that's where looking for insurance. It's better to look when you're younger. The cost is going to be cheaper, and you're more likely to meet insurability, meaning that when they ask the health questions, you're able to pass those because you've had less life exposed to you that could put you at risk of some sort of maybe condition or anything along those lines. I hope you found this helpful. As always, I'm happy to hear suggestions or ideas. Great feedback. I appreciate it. I've got the YouTube channel going now too, so if you just want to subscribe to that, glad to hear from you there. And as always, remember, we're all in this together and look forward to hearing from you. Have a good one. Bye.